The area that we're moving into coming first quarter is going to be a condo rating agency. What we're going to do is we're going to assess the financial wherewithal and stability of 938 condos in 7 submarkets: West Palm, Boca, Hollywood, Hallandale, Fort Lauderdale, Sunny Isle, South Beach, and downtown Miami. And all this is east of 95, and it represents about 150,000 condos. So what we're doing is we're collecting data in a concerted way. It's a real pain to be doing, but we send our people in there and they grab the data, and from this data we're running it through an algorithm. Algorithm is a $10,000 word for a formula. So you run it through the algorithm, and I like algorithm because I get to bang the hedge funds when they come with some sort of intel. If I call it a formula, they're not necessarily going to jump after it. So we're gathering all this data, we're going to run it through an algorithm, and it's going to give us, whether it's AAA, AA, single A, B, junk bond status, whatever the case might be. If anybody buys stocks, you go to Yahoo Finance, you look up a stock, you'll find all the different analysts. They'll have a buy, hold, or sell order on every single stock. We're going to start doing the same thing for condominiums. We'll be doing it on a building by building basis. It'll tell you about delinquency, it'll tell you about HOA, it'll tell you about foreclosures, it'll tell you about anything relating to the financial stability. And that's really the part that's been lacking. So as Rich was referring to condominiums, the biggest challenge is, oh my gosh, the HOA, what's going to happen, and what about the board members and things like that. These are all things that we're going to start to collect and bring together. And we're hopeful that if we can bring it all together, and I've been running it through the attorneys where we were concerned about Sarbanes-Oxley. If anybody doesn't know what that is, after the tech market crashed and you had Enron, Global Crossing, and Adelphia, and all these others, really what came out is that these analysts were putting out opinions, and these opinions were sort of driving the market. So we were concerned about doing that because we started issuing this information. There might be some sort of repercussions, but we hired some of the best and the brightest and the most expensive down here to give us some assessment. And what they're saying is that it doesn't pertain to real estate. So our goal is to get in the middle of every single deal. I don't want to be the guy looking for gold. I want to be the one selling the pickaxe, selling the tent, selling every single thing out there. And if I can charge a basic fee, call it $200, $250, maybe it's a membership, maybe it's if you're part of the Foreclosure Academy club, you get a discount or you get so many. We want to be able to give you an ability to underwrite a project very quickly. So while you might be looking at 5 properties, the maximum 4 months ago, we might help you to be able to analyze, okay, I only want these buildings and I only want that. Now take that to the next level. The next level is if you want to go and you want to buy a condominium today from all the lenders I talk to, and they tend to be community banks down here. What they'll tell you is it's 40% down payment. If you want to get financing, 60% will finance. Well, why does a AAA credit rated building, why shouldn't it only require 20% deposit? And why shouldn't it be something that goes in there and sort of collects the data on a quarterly basis, and we want to be able to affect the market? Think about the perception that will occur if every quarter we can say we've uploaded or we've upgraded 300 buildings, we've downgraded 700 buildings, and then there's 50 that are sort of neutral. We can really sort of gauge kind of where the market is. Plus, it will give you a great insight. If you're a risk taker and you're a gunslinger, why not go into a building that's just struggling because the family of 4 with the dog trying to live the American dream? They're going to go for something more conservative. So that more conservative building is probably going to have a higher price rather than the one that's struggling. Nobody wants to go in there because of HOA.